Welcome, everybody, to this week's edition of Market Insights. Steven Sitkowski here. Hope everybody had a fantastic holiday season and a very happy new year. Give me a pretty exciting year, I think. Market should be fully cooperative. That's what we are expecting for a whole variety of reasons. Let's get to it, let you know what's going on out there. Quick disclosure, everything we talk about here is for educational purposes only. It is not intended as individual investment advice. So what's moving the markets this week? Well, the market last week broke a 9-week winning streak. That was kind of fun. Week after week after week. Cha-ching, cha-ching, cha-ching. By the way, that noise you hear, that's a snowplow. I'm up in the mountains and we got hit with some snow over the weekend. It's a beautiful day today and it's gorgeous looking out, seeing all the white. But anyway, yeah, so that 9-week win streak was broken and we're kind of off to a slow start for 2024. I think that's to be expected. So a lot of people had built up gains in their account. They wanted to exit some of those positions, but they wanted to wait until this year before they started selling so they wouldn't be recognizing the capital gains in 2023. They wanted to push it forward for another year, which is smart. I was teaching a class talking about Boeing last week and the fact that I just don't trust them. I love Boeing as a company. I want them to do well. I've toured their facilities, but it seems like every time things start moving in the right direction, something gets screwed up. In this case, an emergency door that never gets used on an Alaskan airline flight blew out. Big giant hole in the fuselage. Thank God nobody got seriously injured. The seat that was next to that door was empty. The seat next to that one was empty. But apparently the suction that arose from that tore a kid's shirt off. And so Boeing stock, last time I checked, was down almost 10%. NVIDIA is hitting an all-time high. Pretty exciting. AI, it's the thing. 10-year Treasury sits at about 4%, and oil has dropped to right around $70 a barrel. So what to watch this week? Today we got consumer credit numbers coming out. Tomorrow, the trade deficit. Wednesday, wholesale inventories. Not much first 3 days, but then it gets really exciting starting on Thursday. Initial jobless claims. We're expecting 210,000 of them. The CPI number and the core CPI number, they get delivered. And then on Friday, it's the PPI and the core PPI. It's producer price index. So that is inflation at the wholesale level. Of course, the Fed will be paying close attention to all of that. Last week's heat map, a lot of red last week. Healthcare did well. NVIDIA was up 3.6%. Berkshire Hathaway B shares, that's primarily financials in that, and utilities and everything else, by and large, was down. 1 year heat map. So for the last year, there have been some amazing profits to be had. NVIDIA, 259% over 12 months. Are you kidding me? If those were call options, that's in the neighborhood of 3,000%. Meta up 178, Alphabet about 60, Amazon almost 80, Tesla over 100%, Lilly with their weight loss drug, 70%. I mean, pretty much everything in technology has been great over the last year. Financials is also making a nice comeback. So, man, there's been a lot of money to be made if you knew where to look and how to look. So far this year, everything's been on the losing side, but again, large cap growth had the smallest losses. So that's where all the money was made last year, and so far it's had the lowest losses. Yeah, this is all good things come to an end. Week after week after week, market was up, and you could sort of see that it was heading in that direction. But I expect that 2024 should be a really good year. You've got an election coming up. Fed's going to cut rates at least a handful of times this year. They're certainly done raising interest rates. Earnings should be moving higher. There's a lot of cash on the sidelines, 5.7 trillion that could move into the market. So yeah, we expect that it'll be a bullish year. The shorts, those are people that, and mostly we're talking big hedge funds here, who bet on stocks falling and show they would short sell them. They lost 195 billion. I mean, isn't it interesting that the retail investors last year were buyers, right? Folks like us. And the quote unquote smart money, they got a little too smart. They were trying to short the market, kind of got caught with their pants down. IWM, which is the Russell 2000, it is overdue to make a move. So you can see sort of the average path here and what they've done. My experience is everything runs in cycles. Some point that thing's going to come raging back. And there were a couple of times last year when it looked like it was on that path and then kind of fizzled out. It'll be interesting to see what it does in 2024. Our expectation is that could be the place to be. Rate cuts do not automatically mean that the market goes higher. So you can see here the various rate cuts, and these were the initial rate cuts 6 months prior what the market did and 6 months after. So really did nothing, went down, went down. So I'm going to tell you what the key is. The key is, why are we getting rate cuts? Is it because the economy's in trouble? So during recessions, when there's rate cut, the market falls. On the other hand, and this is a Goldman Sachs chart, when there is no recession and you get a rate cut, market loves it. Going to be more spending this year on cybersecurity. 82% of companies surveyed said we're going to spend more money on security than last year. Fed probability. So we have the next Fed meeting that is coming up on January the 31st, 95.3% probability that there'll be no hike. But look at this. In March, there's now a almost 63% probability that they're going to cut rates. I don't see it happening. As long as the economy remains fairly constant, I don't see the Fed hiking until at least the summertime. But we'll see that play out. That's just my personal opinion. Investors remain bullish. Look at the bullish compared to the bearish. We're a little more bullish than we were last week, as a matter of fact, almost 50% bullish, about 25% bearish, and the balance are neutral. This week's earnings, mostly banks and investment banks. On Friday, you've got Bank of America and Wells Fargo, Citibank, you have some investment firms, BlackRock. You also have Delta. So I don't think any of these earnings are going to move the market until we get to Friday. Take a look at the charts. See what they tell us. When in doubt, we always check the charts. Let's look at the S&P 500. That is the ETF SPX. Market's up so far today. So you can see we are well clear of our 50-day moving average. There's a bit of a double top here at around 4,800. Market fell. Now it looks like it's trying to regain its footing. So we'll see if this ends up down here being a level of support. We'll need a couple of more days to be able to make that determination. How about the Qs? Same profile, still well above its 50-day moving average. And IWM that we discussed, up nicely today, up nicely above its 50-day. Could this be the year it breaks out? We'll keep watching. All right, gang. Well, I'll be back with you next week. Until then, stay blessed and bye for now.